right, so 2.1 is federal income tax. What I want you guys to do right here is underline federal income tax. The next thing I want you guys to do is circle the lesson objective. Our lesson objective is to determine the amount of federal, or the amount withheld for federal income tax. Go ahead and put a box around content vocabulary. We're going to learn about federal income tax, and we're going to learn about withholding allowance. So the federal income tax provide money to pay for federal government agencies and services. The law requires employers to withhold a certain amount of your pay for federal income tax. I want you guys to underline FIT. Some of the activities I give you will ask you to find the FIT, and if we don't remember that it means federal income tax, it might be confusing. The Internal Revenue Service, which is the IRS, provides employers with tables that show how much money to withhold. If you look at you just turn the page of your packet, your note packet, you can see I've included tables. So we're going to be using tables to find how much needs to be withheld. The amount withheld depends on your income, your marital status, so whether you're married or not married, and withholding allowances. You may claim one allowance, boop, for yourself. I am one person, I claim one allowance. And if you are married, one allowance for your spouse. So if there's 2 people in your household, you can claim 1 too. You may claim additional allowances for any others that you support. Oh, Nana, she's a little bit on the edge with her dementia, so she moved in with us and we take care of her. So she is, boop, and another allowance. I have 2 kids, boop, boop. They're each an allowance. So if you look at your chart, it'll say 0, so 0 allowances, 1 allowance, 2, and it goes all the way up to 10. If you have more than 10 people rolling around in your crew, they just say, good luck with that. That's a lot. Okay, let's look at our example. Miss Carla. Carla Good is an actuary, and second period I didn't know what an actuary was, so I looked it up. It's somebody who calculates risk and determines what insurance rate you get. So if you're a young and experienced driver, an actuary would say you get a higher insurance rate than an old, really good, non-accident driver. Her gross pay for this week is $425.88. She is married and claims 2 allowances for herself and her husband. So we're going to be in the 2 column. What amount will Carla's employer withhold from her pay for FIT, federal income tax? So we're going to flippy flip. Back to, so we look at the beginning of our chart. Step number 1, and I'm going to come around and help you guys with this. Step number 1, we don't want to be in the singles because Carla is married. So go ahead and flip, not to the first page of charts, not to the second page of the charts, but the third page is the married page. She has 2 allowances, so we need to look over in the 2 column. And she makes, what, $425?
Found it.
So that's $425 is in between 420 and 430. So hop over to the column with the 2 above it. That's boop, boop, boop. 3 columns over, and that's the amount that she's of withholding she's doing. So we have column 2, boop, 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 down to 420. And that's how much comes out of her weekly paycheck. I'm going to pause it. Okay, so when we go to the chart for Carla, she is bigger than 420, but less than 430. And she's got 2 allowances. So that is $14. Actually, let me flip to this page. Between 420 and 430. She's married, so it's that $14. Okay, so the next part is for Dan. If we look under the chart under married with 1 allowance, for the 390, that should give us $18, and it's written right on your paper too. Right. And then Angie, you guys need to make sure you can look up Angie. She's single and claims 2 allowances. Make sure you can find the 31 underneath 400 from 430 to 440. She will never find life. So if you go to your chart, it says at least. So the first number is the at least number. You have to be at least 130, which means you can equal 130. There's some sneaker problems in the ones that you're going to get that are going to be right on the transition number. If you look, if I said 130, there's 2 130s rolling around here. So which one do you pick? You always pick the bottom. So the one on the bottom is the 130 you can be equal to. The one up here, you have to be less than this number. So if I make $10 an hour, I work for 13 hours, so my gross pay is $130. I'm right on that mark, you go to the lower $130. So anywhere on your, I happen to be on married, so you guys can do this on single. Just pick the first
8002934
Okay. Just pick the first number and put an equal sign and put the same number down. So like I'm on the marrieds and I'm at 130.
It's just crispy.
Yeah, I'm connected to my Bluetooth.
Kind of weird.
Okay, so you guys, lesson 2.2 is state income tax. So go ahead and underline state income tax.
How about principal? All right.
So the lesson objective for state income tax is to compute state taxes on a straight percent basis. We're going to learn about the word exemption as well. So underline state income tax, circle the lesson objective, and if you want, you can underline the word exemption. So state income tax, most states require employers to withhold a certain amount of pay for income tax. We live in California, so we pay state income tax. In some states, the tax withheld is a percent of taxable wages. Your taxable wages depend on exemptions, withholding allowances, which allow for supporting yourself, your spouse, and others in your family who are your dependents. So if somebody depends upon you to pay their way, so they're not making their own money that supports themselves and they're a dependent. Here's the sad panda news. Sorry. If your parents claim you as a dependent, then you can't file taxes for yourself, even if you work a job, because you're being claimed as a dependent, so you can't file as a head of household. When you move out and are living on your own and nobody is supporting you, then you can file taxes and get a tax refund. Okay? Your parents are still claiming you as a dependent, and they can claim you as a dependent, I think, until you're 26. No, as long as you're living with them, they can keep claiming you if they're supporting you. So you can't file for your own taxes unless you're self-sufficient.
What?
Then you're not. Okay, guys, please write this down. This is how we're going to calculate our state taxes. It is step number 1. We figure out what our taxable wages are. We do that by taking our gross pay and minusing our exemption. So the first step is our subtraction step. Then we figure out how much tax we're going to pay. Once we find out the amount of money we're going to pay taxes on, we take that pile of money and we multiply it by our tax rate, which is our percent. The reason that you want to minus out the exemptions is because that means it's less in taxes you have to pay. It's a good thing. He's a landscape designer. He makes $44,750 a year. The tax rate is 3%. He takes an exemption for himself and one for his child. So we're going to assume, since it didn't say he was married, that he's taking a single exemption, which is $2,000. Then he gets another $2,000 for his child. So we're going to find the annual state income tax. So the first thing we do is subtract out those exemptions. So on your paper, please write $44,750 minus $2,000. And these guys had parentheses. You guys can write it like this. We're going to subtract out the total of our exemption. What's 2,000 plus 2,000? 4,000. So we're going to take our 44,750 and minus 4,000. So we are not paying taxes on $44,000. We're paying taxes only on the $40,750. So we subtract out our exemptions first, step number 1 with state taxes. Then we calculate the percent of $40,750. We're going to multiply that by 3%. So we pay $1,222.50 in annual state income tax. Here's the hard part. I think the next one, okay. There's one where we have to divide it by what the increments we get paid, but that's not until next time. Okay, so $1,222.50. You guys should have that written down, so you miss this stuff. So write that on your paper. So write the 40,750 times the 3%. So if I had it covered in a box, you guys, that's not written down on your paper. Okay, you guys will love the very last step of this is when we subtract all these out of our paycheck and find out how much we get paid. Okay, so we're going to find the amount of withholding for each of number 1 and number 2. So the step number one is I'm going to take our gross pay, $23,760. I'm going to subtract out $2,000 for being married. Sorry. It says it up there on the chart. What is it for being married? 4,000 for being married. Yeah. And then I'm going to subtract out 2,000 for each dependent. So that is minus 2,000, you guys. I'm writing this and you're writing this. Please write this on your paper. These are for each of our dependents. So we subtract out 23,760 minus 4,000 is 19,760 minus 2,000 is 17,760 minus 2 more thousands is 15,760 minus 1 more 2,000 is 13,760. This is the amount we're paying taxes on. We're only paying taxes on the 13,760. So we're paying 4%. So we're going to take 13,760, multiply it by the 4%.
Are there 8 kids? So 2,000, 2,000, 2,000. I think that's how she's getting this.
So we pay $550.40 in tax. State tax. That's not the federal tax. I'm going to pause for a moment. Ask me any questions. Our gross pay is $43,300. So we're going to start with that. We're single, so we're going to subtract out 2,000. That's our single exemption. And then we have one dependent, so we're going to subtract out 2,000 for the one dependent. 43,300 minus 4,000, 39,300. So we're going to take 5% of this number is what our tax is going to be. So I put that in my calculator, 39,300 times 5%. $1,965 in state tax. Okay, you guys, so go ahead and underline graduated state income tax. That's 2.3.
You won't. And then let's underline or circle our learning objective to determine state taxes on a graduated income tax base. We're going to learn what graduated income tax is. So some states have a graduated income tax, which is a system that increases the tax rate at different levels of income. This tax sets a different rate for each of several levels of income. The tax rate increases as income increases. The tax rate on low incomes is usually 1 to 3%. The tax rate on high incomes may be as much as 10%. And in the state of California, for me, it's 9.3%. Okay, so you guys please write this down. When we find our annual tax withheld, we are going to divide that by how many pay periods there are per year. And those of you guys who thought I'm just going to go ahead and forget everything I learned in chapter 1. Unfortunately, you cannot do that. Please write this down so that you can remember there are 52 weeks. In a year, there are 12 months. In a year, there are 24 semi-months. And there are 26 bi-weeklies. So you're going to be dividing by one of these two items. If you're getting paid weekly, you divide by 52. Monthly, you divide by 12. Semi-monthly, you divide by 24. And bi-weekly by 26. Yes, Corey?
What do you mean, like tips at your job?
Tips are, some employers require you to, technically the legal aspect requires you to record all of your tips and to pay income tax on tips. But that's really difficult to track. So legally you're supposed to pay income tax on tips. Also legally you're supposed to drive 65 on the freeway, but if you just drive on the freeway, you can see how that works out for people. Okay, so let me show you the example. And please work with me here. When you see a graduated tax table, I want you to do the calculations on that table. So our buddy Louise makes $34,500 as a police officer. She gets paid semi-monthly, which means we're going to be dividing by 24, our answer. We're going to use this figure to figure out how much our employer deducts on the state income tax. Anytime you see graduated state income tax, I want you to just stick with the table. So here's how it works. We're going to, on the table, do the first multiplication. In your calculator, 1,000 times 1.5%. 1,000 times 1.5%. And that's $15. So I want you to write the multiplication right next to the 1,000, and I want you to write 15 right on the table. On the next 2,000, it's 3%. So I want you to do that right in your calculator. 2,000 times 3%. And that's $60. Right on the table. On the next 2,000, it's 4.5%. 2,000 times 4.5% is 90. And then when you get to the over part, those of you guys who were doing the purge, and what do we do when we get to the over? What does that tell us mathematically? When we get to over mathematically, what should we do first thing?
What is that?
When you get to the word over, what mathematically does that tell you to do?
Is it minus?
Yeah, you subtract. So we are going to minus 34,500 minus the 5,000. That's 29,500. Then we're going to take that amount, 29,500, times it by the percent. And I actually don't know what that is. That's 1,475. Then we add all those together. So let me show you. You don't have to write down. If you're writing on the table, you don't. Let me show you all the things you do not have to write down. Oh. Whoops. Hold on. Definitely don't write this down. Don't write that down. Don't write this down either. Don't write this down. Okay. Now you have everything written down correctly. Sorry. Step number 1, subtract out the exemptions. I forgot to do step number 1. You guys forgive me?
No.
Well, get over it, because I will forgive you next time you make a mistake if you forgive me when I make mistakes. Okay, so subtract out your exemptions. So our taxable income is not $34,500. It is $32,500. Okay, so then this part is still the same. It's still 1,000 times 1.5, 2,000 times 3%, 2,000 times 4.5%, and then the minusing part is what's different. So we're going to subtract out the 5,000 from the 32,500. So you guys, you do not have to write this down because we've already written it down. Already written that part down. We do have to write down 32,500 minus 5,000. And then multiply that 27,500 by 5%. So we get $1,375. Then you're going to add that together with the 90, the 60, and the 15 to get 1,540. Okay, so we are going to subtract out the exemptions the first time around. I'm just going to do number 1 with you guys. You can do number 2 at your leisure. So Eddie Black is single and receives his bi-weekly paycheck. Oh, wait. I, of course, forgot the very last step on this one. This one we forgot to divide by 24. I did this last period too. So take your total, 1,540, when we add the 1,375 to the 15 to the 60 to the 90. Divide out by 24 because it's how much comes out of his paycheck. So every paycheck for state taxes, he has $64.17 taken out. All right, so let's try this all the way through correctly. This part's easy. When we multiply our items from the table, we get 15, 30, no, sorry, 16, sorry, 15, 60, and 90. So that's how we work this table. Make sure that's right on your table. And then anything over the $5,000, we take 5% of. So the first thing we do is subtract out our exemptions. So he just has himself. So he's single. So we're going to take his salary, which is $21,350. I'll do that up here. This is for number 1. He makes $21,350. We're going to subtract out the $2,000 as an exemption. So he's only paying taxes on the $19,350. We've already taken care of the first $5,000 that he made. Now we're going to calculate the 5% of anything over $5,000. So anything over $5,000. So we have to subtract out that $5,000. We get $14,350. That's here. times the 5%. That's $717.50. Now we total all those little pieces together. So we go $717.50 plus the 15 plus the 60 plus the 90. We get $882.50. But that's for the year. So to get it for his pay period, we need to look, okay, what does he get for the pay period? So let's check it out. He gets paid bi-weekly, so we need to divide by 26. So we're going to take his number, and we're going to divide by 26. So $33.94 is what comes out of his paycheck. Each pay period. I'm going to adjust it. Boop, so we can see all of our calculations. So think about this. Federal taxes, we pay around 11%. I pay around 9% in state taxes. Social Security tax is 6.2%, and Medicare tax is 1.45%. And if we look how much of my paycheck is just state, federal, Medicare, and Social Security taxes, let's do this math together. So it's 11 and 9 is 20, plus 6.2, plus 1.5. So before I even pay sales taxes, almost 30% of my income is already gone out of my paycheck. So that's almost a third of my paycheck just in taxes. All right, so our objective is to figure out how to compute what's withheld for Social Security and Medicare. It's a straight percentage. Social Security is supposed to take care of you when you're an old person and can't work anymore. You get a certain amount every month in Social Security so that if you're old and decrepit and can't work, you at least can eat and take care of yourself. Medicare is for old people who aren't working that need health care. So that's what Social Security and Medicare do. They take care of you when you're old. Yeah, Freddie.
If you started putting your Social Security when you're young, and like when you're really like 15, does it give you a lot?
If you pay into Social Security, unfortunately for you guys, there probably won't be any left when you guys get ready to retire. Sorry. It's not me, it's my parents. They're the baby boomers and they're really needy, so they're going to bankrupt the whole process. But for now, you still pay it out. So go ahead and circle 6.2%. And I have really bad news. So they say when this book was written, and this is not the most current book, when this book was written, you only had to pay taxes until you made $97,500. After you made that amount, you didn't have to pay Social Security taxes anymore. But since this book has been written, I looked this up. It's actually now $128,000. So you have to pay Social Security tax on income up until you make $128,000. After that, you don't have to pay Social Security tax anymore. But for the sake of all of my answer keys and the answers in the back of the book, etc., we're going to use the 97,500 mark. So if your person makes more than 97,500 in our example problems, we will only pay Social Security up to that point. We don't pay on anything over. But for all intents and purposes, it's going to be 6.2% for Social. For Medicare, it's 1.45%. So when they say calculate the Social Security, you multiply by 6.2%. When they say calculate the Medicare, you multiply by 1.45%. So our withheld taxes is our gross pay, so whatever we have, times either 6.2 for Social Security or times 1.45 for Medicare. So straight up, straightforward, multiply by the percent. The only weird part is if you go over the 97.5, then you don't pay Social Security. So you guys have to write that down. Tax withheld equals gross pay times tax rate. Oh, you guys have it on your paper already. Okay. Yay. Okay. All right, so in example number 1, we have a bi-weekly paycheck. It's $728. His earnings to date for the year are $26,208. That is not $97,500, so we ignore it. So right now we're going to ignore it because we're not going to use it to calculate anything. What amount does his employer deduct from his pay this period for Social Security taxes? What are his Medicare taxes? What is the total deduction? His earnings to date are less than $97,500. Okay, so we're going to find the Social Security tax amount withheld. So that's our gross pay. So you guys are writing this in, $728 times 6.2%. So in Social Security taxes, they pay $45.14. So you guys are writing what I underlined down. So just in Social Security taxes, they pay $45.14. Then we have to find the Medicare. So we take that $728 and we also multiply that by 1.45%. So write this down on your paper. That is $10.56. To find our total deduction, we add these together. So we're taking out $55.70 just for Social Security and Medicare. Okay. So our 2 practice problems. Our monthly salary for number 1, $3,100. We haven't met the $97,500 yet, so we're going to pay the full amount. So it's the $3,100. We're going to times that by the 6.2% to find the Social Security. Also going to do that with the 1.45% to find the Medicare. So it's $192 for Social Security. And it is $44.95 for Medicare. And we add those together to find the total. Which is $237.15. And that comes out every month. I was just double checking to make sure they don't want me to do it for the year.